Good day and welcome to the latest update from the Western Producer Markets Desk. I'm Phil Franz-Warkentin and I'm joined today by Jerry Klassen of Resilient Capital. Welcome here, Jerry.
Thanks, Phil.
So today we'll be looking at Canadian seeding progress and provide a quick update on market update on spring wheat, durum, and canola. So Jerry, the weather's been quite variable across the prairies this year. Can you give us a quick update on seeding progress and crop conditions?
Yes, as of June 2nd, seeding progress in Western Canada was estimated to be about 90% complete overall. Now, at this stage, we're expecting above-average yields. Most of Western Canada has received average to above-average precipitation over the past 30 days. So the crop is off to a good start. Now, there are concerns regarding canola that not all the intended acreage will be seeded. There are comments coming from our contacts in Alberta and Saskatchewan that farmers are changing intended canola acres to other crops. This is likely for two reasons. First, there were some excessive rains last week in Alberta, and it closed the seeding time window for canola as it's getting later in the season. Now, secondly, the shortage and higher prices for nitrogen fertilizer have also caused farmers to switch canola acres into other crops. The main point is that canola acreage is uncertain and it's likely lower than earlier forecasts.
Okay, and just looking at elsewhere on durum, I've noticed durum prices have been at a discount to spring wheat, both old and new crop. What's happening there on durum? That's usually not the case.
Yeah, the world durum market is contending with burdensome supplies in the major exporters, including Canada, the US, Europe, and Turkey. The major importers, such as Morocco and Algeria and Italy, are also experiencing a year-over-year increase in production. Now, the harvest has started in the Mediterranean regions of Spain, France, and Italy. The North African harvests and the main French and Italian harvests occur in July, which is followed by the US and Canada. So new crop harvest selling pressure will keep the durum market at lower levels over the next 6 months. We're forecasting a Canadian durum crop of 6.7 million tons, down from the 2025 crop of 7.1 million tons. So we're kind of looking for slightly above average acres. The crop is off to a good start, but the main story in durum is that the world is contending with burdensome supplies.
And in wheat in general, wheat prices have dropped fairly sharply over the past few weeks. What's causing that decline?
Well, the U.S. winter wheat harvest is in the early stages and will move into high gear over the next week. Now, U.S. farmers sell about 50% of their winter wheat in the summer months. So the U.S. winter wheat harvest occurs in June. The European winter wheat harvest occurs in July. Now, this is followed by the Russian and Ukrainian winter wheat harvests, which occur in the latter half of July and August. And then finally, we have the U.S., Canadian, and Russian spring wheat harvests in August and September. So overall, the world has, sufficient supplies in the short term as the Northern Hemisphere crop comes off. There's just overwhelming amount of farmers selling coming on the market here over the next 4 to 5 months. Now, in our previous issue or commentary, we discussed the lower production estimates, but this is likely for the fall period when we experience that seasonal rally. In the short term, like I said, during the harvest season, it's very difficult for the market to maintain any strength.
Okay, and I guess opposite of wheat, canola futures have been climbing higher. I know that July hit contract highs today, and November was above $800 at one point at least. What's driving the canola market?
Well, there are three main factors driving the canola market. First, we mentioned earlier that acreage will likely be lower than earlier anticipated. The market is incorporating a production risk premium. The Canadian canola fundamentals for the 26-27 crop year are going to be historically tight, and given the stronger domestic crush pace, the market needs to ration demand away from export channels. So in addition to production uncertainty in Western Canada, there's also been a heat wave in Europe over the past couple of weeks, and so there has been some yield drag on the European rapeseed crop as well. Now, secondly, the crush margins have been trading near or at historical highs over the past month. The biofuel component of the vegetable oil demand is putting canola into a new price range. Now, there's talk in the industry that a lot of major importing countries or customers for Canadian canola are now starting to realize that crude oil will remain above or at $90 a barrel over the next 6 to 8 months. So finally, those buyers that were waiting for lower prices, they're finally throwing in the towel and starting to take some coverage here for the late summer and early fall period. So there is commercial demand at the current levels. And then finally, farmer selling has subsided over the past month because of seeding, spraying, and road bans. Farmers don't like to make new crop sales until the upcoming crop is more certain. We can say that the market is also functioning to attract farmer selling. Now, let me tell you this, and I talk to many farmers, and I also farm myself. Break-even prices for canola are much higher than last year. Unfortunately, we're reaching up to $17 a bushel now in Western Canada, but this is below break-even values for many regions in Western Canada. There's no profit here. Farmers need about $19 a bushel or higher for their canola to have a clear profit. The bottom line is that farmers are hoping for higher prices, and they are not selling old or new crop at this time. I farm as well, like I said, and I'm not selling any canola right here.
Yeah, so even though prices are high, they need to be higher to actually be profitable. So that's a good thing to keep in mind when you see these high prices, that it's all relative, right? So
that's right.
Yeah, so a lot to consider, and I think once again we've barely scratched the surface, but we'll leave it at that for today. But thanks again for joining us, Jerry, and we'll talk again soon.
Thanks, Phil.